Hello and welcome to SCN Corporate Connect. I'm Jane King at the Nasdaq market site in Times Square, and with me today, Dan McClory, Managing Director, also Head of China for Boustead Securities. So welcome.
Thanks, Jane. Always great to be with you here.
Yes, great to talk to you, and we're focusing on Asia today. I know you've been traveling there a lot.
Right.
Let's start with just your bird's eye view of what's going on in Asia right now.
Well, I think there continues to be a lot of growth coming out of Asia, and especially related to the capital markets. China in particular has been a country where there's literally been a resurgence in listings right here in the US, right here on Nasdaq where we are today, in addition to the New York Stock Exchange.
That's right, I've seen some of them here. So what's behind that, kind of this influx of IPOs this year from China?
Well, first and foremost, it's extremely difficult, I'm going to use the word if not impossible, to list in China.
Really? Okay.
There are 900 companies that are waiting to list on the Shanghai and the Shenzhen stock exchanges.
Bureaucracy? I mean, what?
It's bureaucracy, and they have more of a regulation-driven system as opposed to a rules-based system. So relationships are extremely important. And right now, if you're not from a distressed province economically or a partially state-owned enterprise, it's probably very unlikely that you would be granted permission to get into that queue or to jump ahead of the line and actually have a serious possibility of listing in China. So as a result, these Chinese companies are looking elsewhere.
Here, yeah.
They look at Hong Kong, which is a long process, extremely expensive, and New York with Nasdaq and NYSE. Those are global brands, certainly for technology and innovative companies. Those are the world standards.
They're all coming here, yeah. I mean, you'd think China would try to change that. I know they're really trying to become, a global leader in business. You'd think they'd work on that, but
they are.
Okay.
As I like to say, China, with all of its growth, and not just all of its potential, all of its reality, still has not done a very good job of getting money from the people that have it to the people who don't, and certainly not through their capital markets. In China's view, it's almost a finite pie or a zero-sum game, meaning if we allow more IPOs, we're taking money out of the aftermarket. So maybe share prices of companies will go down, and that's not going to be good. So they're very careful and very selective of if, when, and who gets to list in China.
Interesting. Okay, so the companies that are going public here in the U.S., the Chinese companies, is there any kind of common theme? What are these companies like?
I think there is. First and foremost, these companies they're coming from a broad range of industries, but we're seeing some particular themes. And I'm going to compare this to the last time there were a plethora of Chinese listings about 10 years ago, is when that started. Back then it was manufacturing, it was investment-based, perhaps real estate companies.
I remember there's a big insurance company.
Insurance, some financial services,
right,
banks, you would see large banks. Now it's about innovation. It's about sectors where literally China leads the world. In one area, financial technology, or it's called fintech, has been the object of literally half a dozen Chinese IPOs in New York this year alone. So I think we've gone from being a low-cost manufacturer in China to transitioning into services industries to now innovation, alternative payment systems, online funding and lending, things that China can be seen to be leading the world at instead of copying others.
Okay. How have these IPOs been performing of, say, 2016, 2017?
Overall, they performed extremely well. And I don't think it's any surprise as to why. If I'm to compare the prior era with today, back in 2005 to 2010, when there was a huge run-up of not just IPOs and listings, but what were called reverse mergers. So Chinese companies wanted to get to market fast, so they took over existing public companies and became public quicker. Those deals were invested in large part by stupid white guys, is what I have to say. Not knowledgeable Asian Chinese investors who understood that market. They were a lot of financial opportunists and a lot of investors just seeking return. Not a whole lot of strategy. It was a hot area. Now, this wave of Chinese listings in the US is almost exclusively led by smart Chinese investors. So that's a big difference. And what that has done is it's attracted the non-Chinese investors to say, well, gosh, if this deal has 3/4 of the money coming from China or Asia, there must be something good going on there, because they're certainly not going to bring a company to market that's going to fail in the eyes of their home country investors. So that's a very interesting dynamic that has been layered on, and frankly, it didn't exist a decade ago. Now it's more or less the rule. The Chinese companies want to make sure that they've got supportive, foundational investors who are going to be behind the company, and this may come from current investors that they have that double down and put more money into the company because now they're going to trade on Nasdaq. It might be from employees, suppliers, customers, local government. There are all kinds of investors that are getting behind these deals from China that now trade on Nasdaq and in the U.S.
Now, how are the Nasdaq and also the New York Stock Exchange kind of dealing with this influx?
Cautiously, and they obviously want to protect their brands, as would we, and we do at Boustead Securities. We want to be discerning. That's the word we use a lot about who we get behind and who we don't. So there has been great interest on the part of the exchanges, but caution, and there are a number of processes that have been implemented, you know, from a decade ago until today that didn't previously exist to help vet companies. And the most important one would be this reverse merger rule, as I call it, which now, instead of a company being able to take over a public company and be listed immediately, and then maybe move that company from an over-the-counter market to Nasdaq or the New York Stock Exchange, now there's a waiting period. There's a seasoning period. You have to file your annual report. It has to be reviewed by the SEC, which is really important. But for the IPOs that are coming to market now, there's, again, great interest. Nasdaq is on record as having said this will be a banner year for Chinese IPOs, and they're very pleased, but make no mistake, they are being cautious and protective of the brand, as we are at Boustead.
Sure. So what advice would you give to someone who is thinking about buying a US-listed Chinese company?
I would say first and foremost, make sure it has the attributes that I mentioned. Make sure it's supported by knowledgeable Asian investors, first and foremost. Don't have the money that's raised here be the first dollar into the deal. Make sure that the minimum offering amount is covered by investors from China, people who know and understand and will hold the company accountable in the event of things not unfolding as planned. So that's a really important characteristic, and it's one that we insist on in the deals that we underwrite at Boustead. So I would look for that. Then I would look for sectors that have high growth. I mentioned one, fintech. China literally leads the world in the transformation of becoming a cashless society. I mean, when I was in Beijing a week ago, I tried to pay in cash and they laughed at me. I pulled out a credit card. They started laughing even more. They said, yeah, where's your Alipay or your WeChat Pay? Okay. You know, come on, what's wrong with you? So China has gone from copying to innovating very quickly. And it's because they've been limited to Union Pay. They didn't really have MasterCard, Visa, American Express, and they've had to come up with alternative payment systems. That's one. Another area is initiatives that relate to what's called the Belt and Road Initiative, so the BRI, which is basically China's historic trade route all the way to Europe, has now been reopened through rail, by sea, and it's resulting in a supply chain that can, you know, move from the east coast of China to Rotterdam in 10 days by train. So there are companies, one of our clients, Yangtze River Development, YERR is a ticker, where they're built completely around that whole premise. And this is one of the main policy priorities for the government in China. So that is going to be supported. And again, in the fintech, the example I would give you is the best performing company on Nasdaq and the New York Stock Exchange this year is an IPO that we underwrote for a company called China Nationwide Internet Financial Services. The ticker is CIFS. And we underwrote their IPO at $10. It hit $66 last week. It's around $60 today. And they're a fintech company based in Beijing, helping small and medium-sized businesses move money from the people that have it to them, who are the people that don't. And they've done it very successfully. So I would go with the themes that are being supported and that are greatly needed in China in terms of investment ideas. Okay,
thank you so much, Dan, for sharing that. It's very interesting, the developments that are going on in China, and I know we've certainly seen a lot here, but thanks for adding the detail too.
You're very welcome. Thanks for having me on the show. Always a pleasure.
Okay, so Dan McClory, the head of China for Boustead Securities. Thank you, and thank you as well for joining us on SCN Corporate Connect. I'm Jane King at the Nasdaq Market Site. Have a great day.